Hello and welcome back to Make Finance Easy. Today's video is what does a CFO actually do? The brain behind the billions. When a company makes a $1 billion acquisition, when it decides to go public, when it survives a recession, there's one executive behind the numbers making those decisions possible. That's the CFO, the Chief Financial Officer. And no, they don't just manage the money, they control strategy. The CFO is the highest ranking financial executive in a company. They are responsible for financial strategy, capital allocation, risk management, investor relations, and long term value creation. If the CEO decides where the company is going, the CFO decides whether it can afford to get there and how. Let's break it down into five major pillars. First, financial planning and analysis. The CFO oversees budgeting, forecasting, and future performance. They answer, what will revenue look like next year? Can we fund expansion? What happens if the economy slows? This involves cash flow modeling, sensitivity analysis, IRR calculations, and scenario planning. The second, capital structure and fundraising. Companies need capital to grow. The CFO decides debt or equity, issue bonds, raise private capital, go public. They manage relationships with banks, private equity firms, and institutional investors. Third, mergers and acquisitions. Many CFOs lead deal execution. They analyze acquisition targets, perform due diligence, build valuation models, negotiate deal terms, structure financing. A good acquisition can double a company's value. A bad one can destroy it. Fourth, risk management. CFOs monitor liquidity risk, credit risk, market risk, and operational risk. They ensure that a company can survive volatility, whether it's interest rates change or a supply chain shock. Fifth, investor relations. Public companies answer to shareholders. The CFO leads earning calls, explains financial results, sets guidance, and communicates strategy. Markets don't react to performance, they react to expectation. The CFO manages both. It's not just accounting knowledge. A strong CFO understands corporate finance, strategy, economics, operations, and leadership. They translate financial data into strategic decisions. For example, should we invest 100 million in automation? Will it improve margins? How long until payback? What's the IRR? That's CEO thinking. Years ago, CFOs were primarily accountants, focused on reporting and compliance. Today, they're like strategic partners to the CEO. In companies like Amazon, Apple, Tesla, the CFO plays a central role in scaling operations, managing massive capital expenditures, and optimizing global tax structures. Modern CFOs are often former investment bankers, private equity professionals, or just operators with deep strategic experience. So, what does a CFO really do? They don't just track the numbers, they decide how the capital is deployed, they shape the corporate strategy, they manage the risk, and they communicate with the investors. And ultimately, they are responsible for turning financial discipline into long term value creation. If you want to understand how companies grow, survive, and dominate the markets, study the CFO. And that's all for today's video of Make Finance Easy. And I'll see you guys later.